Hello and welcome back. Robo-advisors and AI are changing the game. Could technology be the secret to smarter investing? We'll look at what they are, the pros and the cons, and what to watch out for so you can decide what works best for you. My name is Melanie Davies. I'm a licensed independent financial advisor. You can find more out about me on the Financial Advisor Register, linked in the description box below. It's important to know that all of my content is general in nature and is considered general advice only. That means it's not specifically tailored to your personal financial situation. So if there's anything that you want to investigate further, always seek out the opinion from a qualified financial advisor to make sure that it's appropriate for you and for your financial situation. Also, my financial services guide is available to download from the description box below. First of all, what are robo-advisors and AI tools? Robo-advisors are automated platforms that use algorithms, data analysis, and often AI to build and manage investment portfolios based upon your goals, your timeline, and your risk tolerance. Some of the AI tools on platforms have portfolio rebalancing, predictive analytics, digital assistants, and chatbots. Why do they matter and how are they changing advice? First of all, it's lower cost and has broader access. Robo-advisors tend to have lower fees compared to traditional financial advisors because many parts of the service are automated and limited in the scope of the advice that it offers. For example, the platform might debit your bank account regularly and invest the funds into a managed fund that you've chosen or the robo-advisor has chosen, depending upon the answers that you've selected on a questionnaire. Robo-driven platforms make investing more accessible to people who might not want a professional advisor because of cost or accessibility. In this way, robo-advisors are trying to help close the advice gap, especially for younger people or for those with less wealth or simpler financial needs. Next, efficiency and speed. AI tools can analyse huge amounts of data much faster than humans, market trends, risk metrics, and tax impacts. And that means that as this area progresses, advice provision will become much more up-to-date and responsive. Reporting, rebalancing, monitoring of investing, this can all happen automatically, which frees up time for both the advisor, if there is one, and the investor. There's also hybrid models as well. This is robo-advice along with a financial advisor. A lot of innovation is coming from the hybrid advice area. That's combining robo tools with human oversight. So you get automation's efficiencies and the human intervention for when things aren't so black and white. And this model helps with trust, accountability, and it also means that we can help clients safely navigate the platform and investing. So what are the limitations and things to watch out for? One size doesn't always fit all. Algorithms are powerful but can't always catch everything or analyse complexities. For example, taking into account your personal circumstances, which is fundamental for good advice, any tax issues in combination with your unique goals. Also, transparency and trust. It's important to understand how the robo tool works. Such things like its fees, the risk, how often it rebalances, its underlying investments, and the integrity and the quality of the advice that the robo tool is accessing to derive the recommendations that it's providing to you. Regulation and oversight are important in Australia. Robo-advice providers must comply with financial services laws under ASIC's rules. Robo-advice providers must obtain an Australian Financial Services Licence or act as an authorised representative of an existing licensee. Also consider the emotional and behavioural aspects. So when markets are volatile, people still want human reassurance. Tools can't replace good advice, the judgment, or accountability completely. So what does it mean for you and how do you decide? Well, for new investors or those with smaller balances, robo-advisors offer an affordable way to begin, but relying upon them alone does increase your risk as it could mean missing out on important strategies, being compliant with legislation, or missed tax strategies. If your financial situation is more complex with multiple income streams, tax considerations, estate planning, or business ownership, you'll still need tailored advice from a qualified professional rather than relying on automated tools. Always check what fees you're paying. How often does the robo platform rebalance? And what are the investment options? Is there transparency about how it makes its decisions? And is the chosen platform a holder of an AFSL or are they authorised representatives of an existing licensees? And is there customer support if you need it? So what does the future look like? Well, there's definitely more accessible tools for people who currently don't get advice. Digital platforms will hopefully one day offer quality financial advice and be more accessible to everyone. For example, the big super funds will build AI agents that will have guardrails built into it and keep the advice relevant for very generic situations and offer limited scope. And for many people, that will be a great solution in comparison to receiving no advice at all. And in time, the AI agents will develop from there. Eventually, this will lead to more AI and predictive analytics and possibly tools that forecast life events and help you to plan dynamically. AI will become more dynamic in the advice process for advisors as well. We're not there yet. Even in the back office, AI assist tools haven't really been developed enough to be confidently rolled out yet. There is simple data gathering and analysis that AI can do for us, but essentially for the foreseeable future, there'll still be the need for human oversight. Robo-advisors are on their way to changing how we manage money and making investing easier, cheaper and more efficient in the years ahead. And as technology evolves, investors can expect smarter and more personalised tools than ever before. AI is gradually making its way to the financial advice space, but there's still a long road ahead. Many advisors are learning how to use it not to replace their own expertise, but to make their work smarter and more efficient. And while AI isn't yet capable of managing the full complexities of someone's financial life, it's already providing useful research and analysis and identifying trends. The real opportunity lies in how advisors combine AI's insights with their own professional judgment and experience. And for now, the industry hasn't really seen a major leap forward in efficiency, but progress is happening. Adopting disruptive technology like AI is a steady journey and not a quick fix. Even small, consistent steps forward can make a big difference over time. Thanks for watching. I'll see you in the next one.